everyone, welcome to the first video of my fall series. So over the next few weeks, I'm going to be doing a whole series about falling in love with different aspects of your budget, and we are going to have a lot of fun. We are going to talk about some really important issues and
hopefully just have a lot of fun and learn a lot of things.
It's going to be really good. So for the first video, I wanted to kind of update my most popular video of all time is about how I organize my bank accounts. If you haven't seen it yet, I'm going to link to it in the description. And since that video is about 3.5 years old, I decided to update it a little bit. And I'm going to tell you guys why you should fall in love with having 5 bank accounts. I'm Sami from A Sunny Side Up Life. Don't forget to like this video, subscribe to my channel, and leave me a comment below. I appreciate you so much for being here, and I hope that you enjoy this video. Account number 1 is my bills account, and this is kind of the anchor for all of the other accounts. So this is the account that you want to get your paycheck direct deposited in, or manually go and deposit your paychecks into this bills account. So basically in your bills account, all you want to leave is enough money to pay the bills between now and the next payday, plus a little bit of a buffer, because no one wants to see their bank account go to zero, and some bank accounts could even penalize you for letting it get below a certain amount. So pick whatever you want to be your buffer, whether it's $10 all the way up to $1,000. It doesn't matter. Pick a number, let it be a nice even number so the math will be super easy. So basically, if your buffer is $100, then whenever your bank account gets to $100 even, that more or less means that there's no money left in the account, right? So what do we include in this bills account? Things like your housing, whether that's your mortgage or your rent, your electricity, your water, your internet, any kind of utilities like that, your cell phone, any kind of monthly subscriptions like Netflix or Spotify or your gym membership, things like that. Also, if you have anything reoccurring, like you have a house cleaner or someone who comes and cuts your grass or daycare or a babysitter or things like that, something that is regular and has a due date, that would be something that you would want to include in your bills account. So the reason why I like to have this money separate is because that leaves you rest assured that no matter what happens, at least you have enough to pay your bills, and at least you're not going to touch that money, and you're not going to use that account for your spending to go buy groceries, and we'll talk about that in a minute. You are going to leave this account just for your bills money, and then you're not going to touch it for anything else. The second account I want to talk about is the spending account. So this is probably where the most transactions are going to come out of. So as soon as you have your bills account, you've allotted for how much you want your bills to be, plus you've left your buffer, right? What do you do with the money that's left over? Okay. Next, we are going to transfer to our spending account whatever we are allowed to spend between now and the next payday. So that could be $200, $2,000, it doesn't matter the amount, it matters how you organize it. It also doesn't matter whether this is a checking account with a debit card attached, or whether you pull this money out and you use cash envelopes, or you do a combination of both, or even if you use a credit card, you would have one credit card that you would use just for your spending so you didn't get it mixed up with everything else, right? The reason why you want to have this spending money separate is because, kind of like the bills, you are rest assured that that money is specifically for spending. So you're not at the grocery store trying to remember which bills have cleared and which haven't, which are still pending and all of that. You know, you can check your balance, you can pull out your cash envelopes and count your cash, whatever you need to do, and you can know that that is exactly how much spending money you are allowed to spend until payday. And then once it's gone, it's gone. So keeping it separate really helps you not have to kind of worry about it and all of that. So some examples of what we would want to put in this spending section is things like our groceries, our gas, our fast food restaurants, any type of fun money, whether we have family fun money or each partner has their own money, you give the kids a certain amount of spending money, pet food, anything like that, any miscellaneous items. Those would go in your spending categories. Then you can break them up even farther on your spreadsheet or your budget worksheet, Or if you do the cash envelopes, you can have different envelopes for each of those spending categories. And it keeps it really simple and separate from everything else. Our third account is our sinking fund, and this is kind of that gray area of your budget. It's for things that are kind of like bills, kind of like spending, kind of like savings, and this is more or less like a catch-all kind of place and a secret sweet spot that really, I think, ultimately makes you successful at budgeting. Once you have your money set aside for your bills and you have transferred or withdrawn your spending allowance for the pay period, then you would move on to sinking funds. So some examples of what we would include in sinking funds are things like Christmas or car maintenance or our kids' birthdays or getting our license renewed if you have a work license or anything random like that. So what we would do, for example, is if you decide that you want your Christmas budget to be $1,200 and you do a monthly budget,
just for quick math,
you would set $100 aside every single month or sink $100 a month into this sinking fund to go towards Christmas. And you can do this for all these type of gray area in between categories of your budget. We also do this for like medical bills and car repairs. We just will sink $100 every single paycheck into that. This is where people are like, those unexpected expenses, I never know when they're going to come up or how much they're going to be. This is how you can be ready for those types of things. And it is also how you can be ready for those irregular things like Christmas, birthdays, gifts, all of those types of things. Throw them in the sinking fund, divide up that number by how many pay periods you want to sink that money in, and then there you go. And the fun thing about sinking funds is that there's not really rules for it. So you can do it however it works for you. You could spend the first 6 months saving hardcore for Christmas and then the last 6 months of the year not having to worry about it, or however you want to do it. Or say you have a budget that is 2 weeks, but you don't want to do the sinking funds every single 2 weeks. You just do them every other pay period. You can definitely do that too. It is up to you how you handle this. The most important thing is that you are allotting for these miscellaneous items. And I always tell my one-on-one clients that with sinking funds, especially your first year or two of budgeting, they're not going to be that perfect, but it is okay to let them grow and evolve over time. Whether you come up with more categories that you need, or you simply just don't have the money to be able to set aside in the beginning of your journey, maybe in a year or two you will. Also with sinking funds, you can do these as cash, you can do these with a debit card, or you can even do these as a savings account. Completely up to you. I used to do these as a savings account, but I figured out that I really would prefer them to be a debit card. So when I'm doing things like Christmas shopping or clothes shopping or things like that, I have that debit card and I also have that money separated. So that's just what works best for me. All right, account number 4 is our emergency fund. So this is basically a type of savings account, but this type of savings account, you want to make sure that it is directly attached to your checking account. So you can do those immediate transfers. You can do those instant transfers if you need the money at the drop of a hat. And that is the emergency part of it. So this money we don't want to put far in a investment account, a money market, or even in a high yield savings account, because it'll take us multiple business days to get that money to where we actually need it. So keep this money in a bank account that is directly attached to your checking account so you can get it as fast as you need it. You also could do part or all of this money in cash if you want to. A lot of people like the security of having the cash on hand. We actually used to do a combination, some in the bank, some in cash. Now we have it all in the bank. But you can do it whatever way makes you feel comfortable. Another question with the emergency funds that always comes up is how much? Okay, so this is different for everyone, and it's okay if your emergency fund is different than somebody else's. You can start from anywhere from $100 and let it evolve and grow over time. You can start with $1,000 or $3,000, let it grow all the way to $10,000. I don't care, it doesn't matter as long as you are happy with that amount. Also know that it's not necessarily a one and done thing. So save the best that you can right now. If that's only $500, great, but don't stay there forever, okay? You know that most emergencies are gonna be more than $500, and you also know that if you were to lose your job or get hurt or something like that, that $500 or $1,000 is not gonna take care of you for very long. So it's okay if that's where you start, but make sure that that's not where you stay with your emergency fund. So I have clients that $1,000 makes them feel good. Both partners have steady jobs, they don't have a lot of debt, or they will go all the way up to $3,000. I even have clients that will go all the way up to $20,000 or $50,000 because they have a really high cost of living, or their job is not very secure, or they work on commission and they're never for sure how much their paychecks are going to be. It's different for everyone. And the fifth account, this is the fun one, you guys. The next goal fund is what I call it, or the big savings account, whatever you want to call it. This is where you'll want to have that money in more of a high yield savings account, a money market account, something like that. For us, we use Ally, and I can link to Ally in the description. It's
Not an affiliate link or anything. I'm just a happy user.
You can do a simple Google search and come up with what are the competitive rates for all of the high yield savings accounts. Usually Ally and Capital One 360 will be at the top as the highest earning of these savings accounts. Plus, Ally also now has this system called the bucket system where you can have one account and actually split it up into different buckets, kind of like the cash envelopes in a way, and you can divide that money up inside that one account. So that is a really cool feature as well. Plus, you can actually earn some money. These high yield savings accounts are actually gonna help you earn some money, unlike these local smaller savings accounts where you earn like 0.5% or something. Obviously, last year the interest rates and all of that were much higher before COVID, but last year we earned nearly $600 just from our Ally accounts. So they mean business with their high yield savings accounts. Another reason why you want to have this in more of a distant account is because this is money that you don't want to be able to touch instantly. This is not your emergency fund. This is where you're saving up for a house down payment or to cash flow a vehicle or something bigger like that, right? So you don't need to be able to tap into this money for an emergency. You have an emergency fund for that. So with these accounts, it usually will take 1 to 3 business days to transfer that money into your checking accounts or your other savings account or something. But I kind of like to have that little bit of distance because I need to think before I make a $5,000, $10,000, $20,000 purchase, right? I don't need that to be instant. So whatever your next goal is, make sure to have a goal list, do the math, have the dates written down, how much is it going to cost you, how long until you get there, and all of that. So when you do have money left over, you can know what it is going towards. So let's recap really quick with the flow system of these 5 bank accounts. Your check goes into your bills account. You leave just enough to pay your bills plus your buffer. You transfer over or withdraw the cash for your spending allowance for that budget period. Then you will take whatever you need, your portions for your sinking funds, put it in that account. You will stack up your emergency fund, or you will pay extra on debt, or you will transfer money to your big account for your next goal if you're saving up to cash flow, or put a down payment on something big. So for me, I love the organization. I love the simplicity of money is where it needs to go. I don't have to second guess what my balances are, what is cleared, what hasn't, and all of that. My money is organized and it brings me so much peace of mind. And when I share this with my clients or here on my YouTube channel or over on my podcast, it is such a light bulb moment for so many people and completely changes the way they think about budgeting. So I hope that it does the same for you, and I hope that this video was helpful. If you liked it, don't forget to hit the like button and share it with your friends. I will talk to you guys next time. Bye guys.